Gold again getting a good pop today, guys. So, amazing to see how gold has hammered on this line so much and it hasn't broken. I give it a lot of credence or a lot of credit. It is pushing up. Resistance is going to come in around $3,417. If it can break and confirm above this, you'll go test 3,500. That will be resistance. If it breaks above that, then you're off to the races to 4,000. Any sort of break with confirmation below this orange line here, which currently sits around $3,350 on gold. And I do think there's a bigger move to the downside. Gold just continues to shine with its relative strength in a market where when risk assets, and this is really important, guys, when stocks are going up and crypto and altcoins are going up, gold usually pulls back because people say, oh, well, gold's boring.
Gold is showing impressive strength again today, holding firmly at a key support level despite repeated tests. Gold prices have rallied significantly this year, climbing as much as 30% year-to-date when they peaked at $3,500 per ounce in April, surpassing J.P. Morgan Research's previous forecasts. Earlier this year, we examined the structural shift in gold's demand and geopolitically influenced pricing drivers fueling its rebasing higher, ultimately posing the question if $4,000 per ounce is in the cards, said Natasha Kaneva, head of Global Commodities Strategy at J.P. Morgan. Following gold's significant 30% rally, some investors have questioned who the major buyers of gold will be in 2025, given current prices. Gareth Soloway is a seasoned trader and chief market strategist based at Verified Investing. He highlights that gold is showing strong upward movement today, repeatedly testing a key support level around $3,350 without breaking it. If it pushes above $3,417, the following targets are $3,500 and potentially $4,000. This strength may indicate long-term accumulation by central banks preparing for a potential decline in fiat currencies over the coming decades. Silver is also moving up, but it has formed a topping tail, a possible reversal signal that has been seen before. To confirm further upside, silver needs to close above the recent high near $39.10. Moreover, the S&P 500 experienced a slight rollover recently, although it remains trading above last Friday's close by approximately 7 points. The analyst highlights an interesting pattern on the S&P Futures ES chart. By measuring the rally from the COVID crash low to the 2021 peak and applying that same distance from the 2022 bear market low, the resulting projection nearly matches the market's recent high, just before the Liberation Day collapse. This alignment suggests a meaningful trend line connecting the 2021 top to the 2024 high, which the market is currently hovering just beneath. Zooming in, there's also a key trend line drawn from the April 7th low, post-collapse. While the price has dipped below it, it hasn't confirmed a breakdown. The market remains vulnerable here, sitting just below the rising trend line, with no strong support trend line beneath it if it breaks lower. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
Gold again getting a good pop today, guys. So, amazing to see how gold has hammered on this line so much and it hasn't broken. I give it a lot of credence or a lot of credit. It is pushing up. Resistance is going to come in around $3,417. If it can break and confirm above this, you'll go test 3,500. That will be resistance. If it breaks above that, then you're off to the races to 4,000. Any sort of break with confirmation below this orange line here, which currently sits around $3,350 on gold. And I do think there's a bigger move to the downside. I still think there's a chance of it breaking down, but I will say that the resilience in gold and even the strength today in an overall flat to positive market is really impressive. Gold just continues to shine with its relative strength in a market where when risk assets, and this is really important, guys, when stocks are going up and crypto and altcoins are going up, gold usually pulls back because people say, oh, well, gold's boring, right? It's slow, it's steady. I'd rather rotate my money into these crazy stocks like a Palantir, like a Coinbase, like a Robinhood. Yet gold is holding up amazingly well. And this again to me is a signal that, at least to me, this is showing good longer term accumulation, probably by central banks that know their fiat currency system is probably on a time clock, right? Eventually it probably is no longer feasible. And again, obviously we're talking 50, 30 years, whatever it is. I mean, it's not near term, but something to keep an eye on. Silver today, let's look at silver real quick. It is upticking. This is a topping tail on silver, so keep in mind it also occurred right here. So until proven otherwise, which would mean a close above here, this is a little bit of a reversal signal. I still like silver overall, but also I have to respect the topping tail. So until the topping tail is negated, I got to respect that that's the most powerful signal. I'm hopeful that it can break above and negate it so it can run to 40 and maybe even to 45 and 50. But let's watch and see. This level here at about 39.10 is your daily close. You need to close above the high of the topping tail right there. And then more recently here, we're having a rollover just in the last 10 to 20 minutes on the S&P 500. Again, as I said before, if we look at where we closed on Friday, we're still net positive. Basically, we're trading here now, and this is where we closed on Friday. So that's still a net gain of about 7 points on the S&P 500. Now, I have some really interesting trend lines to show you guys, some really cool stuff that I found over the weekend. Let's dive back into the charts. We're going to flip to the ES chart. Now, what I'm going to do here, and this is the ES futures. So this is basically the S&P, guys, S&P futures chart, the daily chart. Now, we'll go over our normal trend lines, right? But one of the things I wanted to do is zoom out to the COVID collapse right here. So this is where, again, this was February into March 2020. Now, when that happened, obviously the markets had a V-shaped recovery. Now, what you saw here is a V-shaped recovery until about January 2022, and then a consolidation pullback. That was the bear market of 2022, and then a resumption of a move where we peaked right here before the Liberation Day tariff collapse. Now, what do you guys think that this move has in common with this move? All right. Now, again, I was just kind of playing around with the charts, and I'll show you what I found. And this is just stuff that reminds me that the markets in general are not just arbitrary. So if we take that distance from the low of COVID to the high of the bull market in 2021, we have this full distance. Now, if we just take that, and I can move it around anywhere on the charts, but if we bring that to the low of the bear market right here, the low of the bear market, look at where the bull market in 2020 topped out just before the Liberation Day collapse. Isn't that fascinating? To me, that blows my mind. Now, listen, we've V-shaped recovery and gone higher here and made a new all-time high. But what this does is it essentially creates a trend line, right? This high, which is the bull market of 2021, to the ultimate high pivot of 2024. And what do we have when we do that? Let's draw a trend line in there. Take that high, you extend it out, and lo and behold, we're just coming right up underneath that line. All right. So we're basically just fluttering underneath that line. But isn't that cool? Again, this is the stuff that makes me just love technical analysis when you see how, supposedly markets trade arbitrarily, there's no, rhyme or reason. And then you see that a low from a major collapse in the market and the move to the high is exactly equal to this low to this high. I mean, that's just, to me, again, very, very cool stuff. All right, let's go to the S&P daily chart. Just check in on our trend lines here. So if we zoom in here, guys, this is the big one that I am following right now because, again, remember, we had our other trend line that were a lot of resistance right up above current price. This was the last standing major trend line that you can find. And I say that because it takes the absolute low of the breakdown for the Liberation Day sell-off, right? The April 7th low. And so if you bring this up and notice again, there's no candle along the way that hits or pierces this level, right? Until you get right here. And that tells me that this is the major pivot to the next pivot point, right? It was just before this last move up. And what we see is, again, it moved up and then we finally got a close below. We never confirmed. Remember, confirmation, folks, this is key. Confirmation is the difference maker between a major resistance line once it breaks or a minor. And so the fact that we haven't confirmed, to me, tells me this is only minor resistance until it confirms. But minor resistance resistance is still resistance. It's just probability wise, it's easier to break than major. Okay. But either way, we now have hovered and we're hovering just below this white trend line here. And again, we'll see where we go when we trade today. Now it is upsloping, so it enables the market to still go higher, but it essentially puts the market in a vulnerable space with no subsequent down move trend lines of support from the low on April 7th.
Gareth explains that the Nasdaq is hitting a key technical level. A trend line drawn from the COVID crash low to the 2022 bear market low, with a parallel line extended to the 2021 high, was just touched again last week, suggesting a possible top. While it doesn't guarantee a significant drop such as the past 25 to 37% declines, it raises caution for at least a potential 10% pullback. Traditionally, a weaker U.S. dollar and lower U.S. interest rates increase the appeal of non-yielding bullion. Economic and geopolitical uncertainty also tend to be positive drivers for gold due to its status as a haven and its ability to remain a reliable store of value. It has low correlation with other asset classes, allowing it to act as insurance during falling markets and times of geopolitical stress. But given gold's diverse and fluid drivers of demand at the moment, the metal has recently served both as a debasement hedge or a form of protection against the loss of a currency's purchasing power due to inflation or currency debasement, and in its more traditional role as a non-yielding competitor to U.S. Treasuries and money market funds. We still think risks are skewed toward an earlier overshoot of our forecasts if demand continues to surprise our expectations. For investors, we think gold remains one of the most optimal hedges for the unique combination of stagflation, recession, debasement, and U.S. policy risks facing markets in 2025 and 2026, said Gregory Shearer, head of base and precious metals strategy at J.P. Morgan. BS haven't been the only ones increasing their relative share of gold holdings over the last couple of years. In the financial gold markets, investors' futures positioning remains long, indicating an expectation that the price will rise in value in the future. Non-commercial futures and option long positions in COMEX Gold, the primary futures and options market for trading metals, reached a new high in 2024 in real terms. Now, let's get back towards the interview.
All right, next up, we have to go to the NASDAQ, and I wanted to show this chart because, again, it is an absolute gem of a chart. And the reason I say that is because you have the COVID low to the bear market low. And I've shown you guys this one before. And again, all I did was connect those lows, stretch a parallel up to the bull market of 2021, okay? And lo and behold, what do we get? Putting it as exact as I can. Exact high to exact high. Look at this, guys. Last week at the highs on the NASDAQ, we hit that line. Does history always determine the future? The answer is no. If we see sell-offs of this magnitude and this magnitude, you would then be remiss if you weren't a little bit on the cautious side of wondering if at least we get some sort of, let's say, maybe not a 25% drop. And what was this drop? I mean, this was even bigger here. I can do a quick measurement of it. In 2021, it was 37%. So it doesn't necessarily mean 25 or 37%, but maybe 10%, maybe. We're going to find out here as we're right up here. And the question is it the 2025 highs or not? Let's watch and see. All right, flipping over to the US dollar. The dollar is pulling back. Now, same thing like we just discussed on the S&P, just in the opposite direction. So on the S&P, remember, this is minor resistance because price got below, but it hasn't confirmed. And on the dollar, we broke above, but no confirmation, and still hasn't confirmed. And so this is minor support. So minor support, again, should still be, but understand that the probabilities of it getting below are much easier than if it was major, and major forms when you confirm above the level. All right. So again, we'll keep an eye on this as the dollar comes down just a bit. Now, the 10-year yield, taking a look at the 10-year yield, it is still stuck between a few trend lines here. We have a very obvious trend line connecting this major pivot from January 2025 to the high of May 2025. We never got up there yet, I should say. And then we have two lines here, one right here and one upsloping here. This is obviously the more major one because it's a major low to this low. And again, we're still above that. So the yields are coming down. We're back to 4.37 on the 10-year yield, but by no means are we into support or are we out of it. And essentially, what pattern formation is this? In fact, I'll take away this trend line. What pattern formation is this? This in technical analysis is referred to as a wedge pattern. Wedge pattern means that you have the biggest move from peak to trough, and then a smaller move from peak to trough, and then continues to kind of get tighter and tighter. Essentially, think about it as a spring being wound until eventually it breaks one way or the other. And what I always say to you guys is whichever way it breaks, that's going to be the big move, right? It's going to be the blast off, either to the downside or to the upside. So these are the little things that, again, give me a little bit of an inkling on once a wedge breaks, okay, this move should be a bigger move to one way or the other. And needless to say, you do want to see confirmation on a break above a wedge or below, because again, I've seen the fake outs occur many, many times, folks, from the institutions. The institutions know these lines, right? It's just they generally want to just, when they can, take the money from retail very easily. All right, if we look at the chart here, this is a doji because it was up high, then it went low, and then it kind of closed in the middle area right where it started, okay? And essentially what's going on here in a doji is the bulls out of the gate on Friday took this thing sky high. This was on the Genius Act passing and the bullishness in crypto. And the bears came in and slammed it down, and then the bulls kind of came back in and lifted it up on a Friday afternoon back to the break even. But essentially, when you have a flat candle in the middle here, it's a doji because what it's telling you is that the equal amount of buyers met equal amount of sellers during the trading day. And that's why it closed right where it opened. That's when you don't get really a big green or red candle. It closes kind of with this very thin kind of line across. That tells you an equal number of buyers and sellers essentially got and met. Now, if it was a bottoming tail, you would have seen a close in the lower 25% of the candle. This is not from peak to trough, not in the lower 25%. But again, a doji like this is still bearish because it's showing that there's an equal amount of sellers finally emerging after a big move up. And by the way, the volume, I don't have the volume on my candle chart here, but the volume was massive on Friday. So again, yes, this is a bearish signal, reversal signal. It's not quite as good as a topping tail, but as a technician, you still take note of it. And
gold continues to demonstrate exceptional durability and upward momentum, driven by fundamental developments in global demand, central bank accumulation, and concerns over the erosion of fiat currency value. Technical analysis supports the case for further upside, with potential targets of $3,500 and $4,000. Meanwhile, silver shows promise but should be approached with caution until it breaks its recent highs. Meanwhile, prominent market indices such as the S&P 500 and Nasdaq are approaching critical trendline resistance, indicating a probable drop. Despite mounting geopolitical and economic uncertainties, gold remains an appealing hedge, with investor positioning indicating ongoing strength. Do you think gold will surpass $4,000 before the end of 2025, or will macroeconomic developments stall that move? How do you envision central bank buying habits influencing gold and silver prices over the next 12 months? We welcome your feedback in the comments area below. If you found this helpful content, please give it a thumbs up and remember to subscribe to stay updated. Thank you for joining us on this trip.